Hi, everyone. This is Logan Hertz with Hazeltine. We are back. I believe this is part 4 of our case study on John Smith. So just to recap, first we optimized John Smith's cash flow situation where we found him an extra $2,000 worth of monthly cash flow without sacrificing his lifestyle just by optimizing what he's already doing. You can see that in part 1. In part 2, we looked at our overall comprehensive framework and solution for how we're going to set John Smith up. You can see kind of the result of that here, where we set up his defense, his protection, and his savings. And now we've been going through some of the individual solutions we put in place. In our last episode, we looked at the disability income policy that we put in place. And today we're going to take a look at the critical illness policy that we put in place. So let's take a look. Okay, so this is the critical illness policy that we put in place on John Smith. Okay, we have a $500,000 benefit amount and a total monthly premium of just a little over $500. I believe you can pay that premium annually as well and get a small discount. But for the purpose of this exercise, we're going to be paying it monthly. Of course, you can see John Smith, 35 years old, male, non-tobacco. Okay. This is a list of all of the things that are covered, right? And you can see, heart attack, cancer, all the things that you would expect. Just note that there are some things like here, non-invasive cancer that is only covered 25%, meaning that instead of getting a $500,000 benefit, you would get a $100,000 benefit for some of these conditions. But most of these conditions, again, the most common are heart attack, stroke, invasive cancer, right? You would collect a $500,000 benefit. This policy is indemnity based, meaning there's no wrangling with the insurance company about, is this doctor in or out of network? Is that treatment necessary? Blah, 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 blah. This is some experimental treatment that we won't cover. No, it's, yes, I had a heart attack. Black and white, very simple, easy to demonstrate. And then you collect your $500,000, okay? And there's so many things that happen when you have a critical illness that having this money in your pocket is so important for you and your family. Just one of them might be, what if you want to look at alternative treatments, right? I certainly know people who have benefited tremendously from alternative treatments once they got a cancer diagnosis, and health insurance won't cover that, right? They just won't. It's not within their rules, right? You don't want to be limited as to which doctor you're going to be working with. The best doctor might be out of network, right? Plus, as a result of this, you might be unable to work. You might have to leave your job, and then you have no income and no employer provided health insurance and so on, right? The number one reason that people declare bankruptcy is for medical reasons. And the majority of those people had health insurance, okay? So this is still, I think, very important, even if you have health insurance. And of course, in the case of John Smith, we switched him to what, for many people, I consider to be a superior solution to health insurance, which is a health sharing plan, which is much more cost effective and much more flexible and a much more pleasant experience in many ways. But I just don't want people to fall under the illusion that, oh, I have health insurance, therefore I'm covered, quote unquote. Well, what does that mean, right? My experience with health insurance is that I try to get the best that I can. I pay a high premium, and then the health insurance company always ends up throwing some obstacle out there, some technicality, right? It's always a very frustrating process trying to navigate that bureaucracy, even if you have a quote unquote good health insurance plan. So for all of those reasons, I think this sort of a policy is absolutely necessary, even if you have good health insurance, right? And so here you can also see we have this additional critical illness rider where some additional conditions that would be covered. I think in particular, Parkinson's is important. So then this is a summary of the policy and the riders. So the base policy here you can see costs a little under $400 a month. That gives us the $500,000 benefit, okay, straight up covering your standard critical illness. Then this additional critical illness rider covers those additional conditions we saw listed above. That's an additional $40 a month. Reoccurrence as well. The base policy does cover some reoccurrence. This adds more, and we'll get into some of the details in a minute. Accidental death benefit is what it sounds like. If you die in an accident, there's a $250,000 benefit going to your family. Loss of independent living. This is a nice one because this actually covers you for long-term care. So there actually is some long-term care protection in this policy as well, where you can collect that benefit amount if you have a long-term care need. We'll get into that later. Critical accident provides for some benefits if you get into an accident and are hospitalized. Disability waiver premium is what it sounds like. If you become disabled, then the premiums are waived and your policy stays in force. Okay. There are other riders that are available. And in particular, if you are married and have children, you can get both your spouse and your children covered on this policy as well. Okay, let's go into a bit more detail. Okay. So the base policy gives you a $500,000 lump sum benefit should you have a critical illness. Heart attack, stroke, cancer are the most common, okay? It does cover some reoccurrence. So notice it will be paid for each critical illness if it's at least 6 months later and the new critical illness is not caused by or contributed to by a previous one where benefits have already been paid, okay? So that's important. This policy, even the base policy, will cover you for multiple critical illnesses, right? So the amount of benefit you can collect from this policy is not limited to $500,000. It could be in the millions if you have multiple events. Now, the key caveat there is it can't be caused by or contributed to by a previous critical illness, right? So if you have a heart attack, right, and then later you have another heart attack, it's pretty likely probably the first heart attack contributed to the second. So you may not be able to collect a second time. But if you had a heart attack and then later you had cancer, totally unrelated, you could collect that benefit twice. That's important, right? That's important. Okay, return of premium upon death. So here, this is why I say this policy is a no-lose proposition. So I generally lump insurance policies into two different categories. One is just pure insurance, which is where you're paying a premium and you hope you never have to use the policy, right? You want robust coverage in place, but you never have to use it. You hope you never have to use it. Like the disability policy we covered in the previous episode. You absolutely want that coverage and you want it to be good and robust, but you hope you never have to use it, right? The money you pay into that premium, you hope you never get any of it back because the only way you get it back is if something bad happens to you, right? Then there's another category of insurance policies where you actually are going to get what you pay into the policy back. Whole life insurance is a good example of that, right? You're always going to get everything you pay into the policy back and then some, as long as you can think long range enough. Same thing here. Okay, so obviously you're going to get your money back if you use the policy, but if you don't and you die never having used the policy, all the premiums you have paid into this policy are returned to your estate. So again, good financial planning requires long-range thinking, okay? So the premiums we pay into this policy, we can view them a little differently. Yes, it is a cost, but it's a cost we're going to get back, right? So, and I think the likelihood is you're going to use this policy, right? The likelihood is you should keep this policy in force until the day you die, because this policy gets more valuable every year it's in force. Okay, the whole point is to protect your insurability, right? But even if you don't use it, you're going to get the premiums back if you can think beyond your own mortality. And then reduction of benefits at age 70. This is an important caveat to the guaranteed renewable for life. So I'm surprised it doesn't actually call it out here. Maybe it does later. But this policy is guaranteed renewable for life. That's really important. Guaranteed renewable for life, right? So John Smith is going to take out this policy at age 35, okay? He will be paying those same premiums at age 85. okay? No matter what happens to his health, no matter how many times he uses the policy, this policy stays in force, okay? So that's incredible, right? That is absolutely incredible. That means the whole point in taking out this policy is you want to keep it in force until the day you die, just like whole life insurance, okay? Because this policy gets more valuable every year it's in force because it's cheaper relative to your age, right? That premium stays the same no matter how old, sick you get, okay? And obviously, you're going to be more likely to use the policy. This policy is way more valuable to him when he's retired at age 75 than it is at age 35, but he'll be paying the same premium and he'll be getting the same benefits with one important caveat, and that's this one right here, the reduction of benefits at age 70. Okay, so after you reach the age 70, okay, the benefit amount is reduced by 50%. So let's say he hopefully remains perfectly healthy up to age 70 and never uses the policy. Again, policy stays in force, but the benefit amount is now reduced from 500,000 to 250,000. Okay. Now that's $250,000 per event. Remember, you could use this policy multiple times. So you could still collect benefits in the millions out of this policy if you end up using it multiple times. Okay. Also, my understanding is this reduced by 50% does not apply to the long-term care coverage. So let's scroll back up a little bit. Here, this loss of independent living rider, this covers you for long-term care. So that's a $500,000 benefit amount you can collect. And that benefit amount, my understanding is not reduced after age 70. So that's really important. We have some long-term care protection in this policy as well, right? Long-term care is a big deal. All right. So we have that amount is should we have a long-term care need. And that is not reduced after you reach the age of 70. But the base benefit amount is. Okay. All right. Now this just gives a list of the critical illnesses covered by the policy, and it defines them. I'm not going to go into too many details on that, but you can see, Alzheimer's is another big one, right? That can be obviously extremely expensive and painful for a family to go through. Lou Gehrig's disease, Parkinson's, etc. These are the ones added by the additional critical illness rider, so it covers a few more. Okay, and then we get into some of the definitions of the riders. Now here's one of the ones I want to highlight: reoccurrence rider. Okay, so the base policy will cover you for multiple events as long as a subsequent event is not caused by or contributed to a previous event. So if you have one heart attack, right, it's more likely you're going to have a second heart attack later on, right? But those subsequent events on the base policy, you probably couldn't collect because those are going to be almost certainly contributed to by previous events. It would have to be a completely unrelated event, right? You have a cancer and then you have stroke, totally unrelated, right? Then you could collect twice. This reoccurrence rider will cover you if you have a subsequent diagnosis of the same critical illness, okay? This is not at all an unlikely scenario where you get diagnosed with cancer, okay? Let's say they catch it early, stage 1, right? You get treatment, and then, hopefully it ends up being not too big of an event. And then you are treatment and symptom-free for a period of at least 12 consecutive months, right? And then after that, your cancer comes back, right? Then you can collect again. That's why this reoccurrence rider is, in my opinion, so important, right? That's not at all an unlikely scenario if you have a critical illness that you might have a subsequent diagnosis of the same critical illness. So this adds even more robust reoccurrence, okay? So that's a very important rider. Accidental death benefit, pretty straightforward, $250,000 benefit if you die as a result of an accident. This loss of independent rider, okay, is the long-term care coverage that we talked about. Critical accident, this covers you for, this is sort of like a mini accident insurance policy in here. So you can see here in this table, you're not collecting a $500,000 benefit. This is really intended to cover your out-of-pocket costs if you have an accident and are hospitalized, right? So you can see how the benefit amount goes up to a maximum of $25,000. And then the disability waiver premium, should you become disabled, then all premiums are waived and the policy stays in force. Okay, and that really is it as far as the policy goes. There are some exclusions here of what you'd expect, and we have a bunch of numbers here, and that's pretty much it, right? So I want to point out a couple of things, right? This policy is not a replacement for health insurance necessarily, but a supplement to. And I think more and more people are waking up to the fact that they need this given the rising costs of medical care and given how the limitations of your typical health insurance plan, even good health insurance, provided by an employer or one that you pay for out of pocket. And it protects your insurability, right? Once you have this policy in force, it's guaranteed renewable for life, right? You can keep this policy in force until the day you die, no matter what happens to your health, okay? So that's important, okay? Also, the combination of policies becomes important. This is something that applies, I think, to my overall framework of offense wins games, defense wins championships. When you play defense, you have to play defense as a team, okay? It's not necessarily true when you're playing offense, right? So there are people who became wealthy purely through real estate, right? They didn't quote unquote diversify, okay? Warren Buffett doesn't believe in diversification. He calls it diversification. His advice is put all your eggs in one basket and watch that basket very closely. But the point is invest in what you know, right? So there are people who got rich and they invested just in real estate because they learned real estate and they learned how to do it and they got rich doing that, okay? But when you're playing defense, again, it does you no good to have one insurance policy in force, right? Or one piece of defense that you have, like cash savings, which is a form of defense, a form of protection as well, okay? So you need to have multiple protections in place that cover you for all eventualities, right? And this is not difficult, okay? Playing defense is not hard. Playing offense is hard. Playing defense is not, financially speaking. You just have to have the discipline and the foresight to do it. But the point that I'm making here is, if we look at the policies we're setting up, okay, we have, let's go through a scenario, okay, where we can see how all these policies work together to protect you, okay? Let's say you have some kind of a critical illness event. Let's say it's a stroke, okay? And then let's say you're still in your working years, okay? And then let's say later, as a result of that stroke, you need to enter into some kind of, you have some form of long-term care need, which, by the way, doesn't necessarily mean you enter a nursing home. 75% of long-term care claims, the person is still living at home, but they just need some form of assistance. And then eventually you die as a result, okay? The combination of these policies will cover you for every single step of that long, painful event, okay? So step one, you have a stroke. You can immediately collect the $500,000 benefit from this critical illness policy, okay? Step two, as a result of that stroke, you're unable to work and you have no income. Well, now you can collect the benefit from your disability income policy, okay? So that covers you during step two while it replaces your income. Step three, as a result of the stroke, you have a long-term care need. You're unable to perform 2 out of the 6 activities of daily living. Well, now you can collect on the chronic illness rider on your whole life policy or a long-term care insurance policy that you might have in place. Okay, so it covers you for the long-term care need. And then eventually, unfortunately, you die as a result. Well, now your life insurance policy pays out a death benefit. Okay, so through all 4 phases of that event, you were covered. Okay, this is the importance of playing defense as a team, right? It's better to have more modest coverage across the board to get all your bases covered than it is to have super robust coverage in just one area and neglect the others. So that's something I might go into in more detail in a in a separate video, but I'm just trying to situate this critical illness policy in the big picture, because we can never look at any of these solutions in isolation, right? We have to look at them as part of your overall financial picture, okay? And again, we have to view these as financial assets, not as costs to be minimized. That is not the way rich people view insurance, okay? We're setting up your defense first. And then once you have your defense in place, then you can play offense a lot more safely, knowing that you have this great robust protection in place. Not to mention, okay, there's a huge psychological component to this as well. When you have the peace of mind that these policies and this robust defense gives you, you will be in a position to make much better financial decisions, okay? As Chris Kirkpatrick likes to say, life doesn't exist on a spreadsheet, right? We can lay out a plan for you all day long, but are you really going to be able to execute on that plan? Right? Well, the more you have peace of mind, the more likely you are going to be able to have the discipline to follow through on any plan that you put in place. Okay. Whereas if you have unknowns, the more unknowns you have, the more psychological pressure that puts on you, right? And the more pressure it puts on you to go make money in the market, right? And that's where people start to make less than optimal financial decisions. So do not discount the psychological component to this as well. So this was the critical illness policy piece of John's defense that we set up. In the next portion, we're going to get into the fun part, which is the life insurance part, where we're going to cover John for life insurance. We're going to lock in his insurability. We're going to cover him for long-term care, and we're going to set him up for a comfortable retirement, all in one fell swoop, through the magic, at least in part, of the infinite banking concept, as well as the great tool that is life insurance. So we'll talk about that next time. Thanks for watching.